After weeks of relentless selling and widespread panic, the crypto market is finally showing tentative signs of life. The mood on trading floors has shifted from despair to cautious optimism, as investors and traders alike begin to wonder if the worst might be over, at least for now. The global market cap, which had plummeted during the recent downturn, is now rebounding and hovering around the $3.1 trillion mark. This recovery, while still fragile, is a welcome relief for those who weathered the storm. Bitcoin, the bellwether of the crypto world, has managed to reclaim the $90,000 level, while Ethereum is holding steady near $3,000. These price points are more than just numbers. They represent a renewed sense of hope and a potential turning point for the entire market, which was recently gripped by fear and uncertainty. The Crypto Fear and Greed Index, a key sentiment indicator, has improved noticeably. Yet, despite this uptick, traders remain on edge. Many remember that recoveries in crypto are rarely smooth or predictable, and volatility can return at any moment. Buyers are beginning to step in, seeing opportunity in what they believe are undervalued prices. Some are bargain hunting, while others are cautiously averaging in, hoping to catch the next wave up. But the real test lies ahead. Can this bounce evolve into a sustained rally? Or is it just a temporary respite before another downturn? For the market to truly recover and grow, it will take more than just a few days of green candles. Renewed confidence from both retail and institutional investors is essential, as is a supportive macroeconomic environment. Factors like inflation, interest rates, and global economic stability will all play a role in determining whether this recovery has real staying power. As of November 30, 2025, the market stands at a critical crossroads. The recent gains are certainly encouraging, but they remain fragile. Any negative news or unexpected shocks could quickly reverse the current momentum. The coming weeks will be crucial in testing the market's underlying strength. Will the current momentum continue, drawing in more buyers and building confidence, or will the bears regain control, pushing prices back down and reigniting fear? All eyes are now on Bitcoin's performance, the flow of institutional capital, and broader economic signals. Every headline, every data point, and every major trade could tip the balance one way or the other. The story of this rebound is just beginning. With so much uncertainty still in the air, every trader, investor, and analyst is watching intently, waiting to see if this fragile hope can blossom into a true recovery. Bitcoin has surged over 12% from its recent lows, catching the attention of traders and investors worldwide. This dramatic move has reignited excitement in the crypto markets, with many now watching every tick and candle for clues about what comes next. The energy on trading floors is palpable, as both seasoned professionals and retail traders try to anticipate the next big move. Currently, Bitcoin is locked in a tight range between $90,000 and $92,000, a new battleground where bulls and bears are fiercely contesting control. Every small price movement is being scrutinized as both sides look for signs of weakness or strength. This range has become a psychological arena, with traders debating whether the next breakout will be up or down. Holding above $90,000 is seen as a psychological victory for the bulls, signaling resilience after recent volatility. However, the rally's strength is being questioned due to persistently low trading volume. Without a surge in participation, some analysts worry that the price could be vulnerable to a sudden reversal, as the foundation for this move may not be as solid as it appears. The real test lies just ahead, at the resistance zone between $93,000 and $96,000. This is where sellers are expected to step in, and where the market's true intentions will be revealed. Many traders are bracing for heightened volatility as Bitcoin approaches this critical level, knowing that a decisive move here could set the tone for weeks to come. If Bitcoin manages to break above $96,000 with strong volume, it could trigger a powerful run toward the highly anticipated $100,000 mark. Such a breakout would not only capture headlines, but also signal a true trend reversal, potentially drawing in a new wave of buyers and further fueling the rally. On the other hand, failure to overcome this resistance could send Bitcoin tumbling back to retest the $80,000 level. Such a move would likely reignite fear and uncertainty across the market, shaking the confidence of even the most optimistic investors and reminding everyone of crypto's notorious volatility. This battle isn't just about Bitcoin's price, it's a test of the entire cryptocurrency market's resilience and sentiment. Altcoins and related assets are also watching closely, as Bitcoin's next move could have ripple effects across the digital asset landscape. A strong, high-volume push through resistance would be a bullish signal for the whole sector, while a weak or failed attempt could spell trouble, leading to broader market corrections and renewed caution among investors. The outcome of this battle will set the tone for crypto as we head into 2026, shaping investor sentiment, market narratives, and the next chapter in Bitcoin's ongoing story. While Bitcoin grabs headlines, Ethereum's steady hold at $3,000 is quietly reassuring investors. Despite being down 38% from its peak, Ethereum's stability signals strong support and belief in its long-term value, especially with major upgrades ahead. The recent gas limit increase and upcoming Fusaka upgrade show the network's focus on scalability and efficiency. Big players like Bitmine and even Vitalik Buterin are doubling down, reinforcing confidence in Ethereum's future. This blend of technical progress and ecosystem support makes Ethereum a pillar of the current market. If ETH can hold $3,000 and climb, it will confirm broader market recovery and encourage capital to flow into altcoins. For now, Ethereum's quiet strength is a stabilizing force in a volatile market. Institutional investors are returning, signaling renewed confidence in crypto's long-term potential. After heavy outflows in November, spot Bitcoin and Ethereum ETFs are seeing positive inflows again. BlackRock's iShares Bitcoin Trust is now a top revenue source, and even BlackRock's own portfolio is increasing its Bitcoin exposure. The Coinbase premium turning positive suggests strong U.S. institutional buying. Even politicians are joining in, with Senator Dave McCormick investing in a Bitcoin ETF. However, stablecoin outflows and some long-term holders selling add caution to the optimism. The return of institutional buyers is bullish, but ETF inflows must continue to overpower selling pressure. Sustained institutional participation is key for a lasting recovery. The market's next move depends on whether this smart money sticks around. Crypto's fate is tied to global macroeconomics, especially U.S. Federal Reserve policy. Slowing U.S. job growth is creating a risk-off mood, but also raises hopes for Fed rate cuts. Lower rates could drive investors back into risk assets like crypto, fueling a potential rally. The next big moment, the Fed's December 9th meeting, where traders will look for hints of a dovish shift. A signal for future rate cuts could boost liquidity and risk appetite, powering Bitcoin and the broader market higher. But if the Fed stays hawkish, the rally could stall. Traders are caught between economic slowdown and the hope for easier monetary policy. The Fed's next move may matter more than any crypto headline. Solana, trading at $136 and still down 40% from its high, remains a top altcoin contender. The big news. Franklin Templeton has filed for a spot Solana ETF, signaling major institutional interest. An ETF could unlock a wave of new capital, but regulatory hurdles remain. CoinShares just dropped its own Solana ETF bid. After a long streak of inflows, Solana products saw a day of outflows, hinting at profit-taking. Still, net inflows remain strong, showing sustained interest from big players. Franklin Templeton's move outweighs smaller setbacks and sets a positive precedent. Solana's ETF journey could reshape the altcoin landscape and institutional adoption. XRP's spot ETFs have already demonstrated the transformative potential of regulated altcoin investment products, opening new doors for both seasoned investors and those just entering the crypto space. The launch of these ETFs marks a significant milestone, not just for XRP, but for the broader cryptocurrency market, as it signals a shift toward greater legitimacy and acceptance within traditional finance circles. In their very first month of trading, XRP ETFs attracted an impressive $644 million in net inflows. This remarkable figure highlights the immense demand from both institutional giants and everyday retail investors, eager to gain exposure to digital assets through regulated channels. The scale of these inflows underscores a growing confidence in crypto as a legitimate asset class and shows that investors are ready to embrace new opportunities beyond Bitcoin and Ethereum. This surge of capital has played a crucial role in helping XRP establish a solid price floor around 2.117, providing a sense of stability that was previously lacking. With $2.22 now emerging as the next key resistance level, traders and analysts alike are closely watching to see if this momentum can push XRP even higher, potentially setting new benchmarks for the altcoin market. The success of these ETFs has fundamentally altered XRP's market dynamics, tying its price action more closely to the flows and strategies of large institutional investors. This new relationship means that XRP's price is now influenced not just by retail speculation, but by the calculated moves of major financial players, adding a new layer of complexity and stability to the market. XRP's strong ETF debut sets a powerful precedent for other altcoins, such as Solana, and signals that there is a real appetite for diversified crypto ETF products. As more altcoins seek ETF approval, the market could see a wave of new investment products, further expanding access and choice for investors. This trend is a clear sign of growing market maturity and the rapid development of supporting infrastructure. With improved technology, better regulatory frameworks, and increased transparency, the crypto market is evolving to meet the needs of a broader range of participants. For XRP, the influx of ETF investments has provided a much-needed boost in confidence, especially after years of regulatory uncertainty and legal battles. Investors now see XRP as a more stable and credible option, which could pave the way for further growth and innovation. Ultimately, the performance of these pioneering ETFs offers a compelling glimpse into the future of crypto as it moves closer to mainstream adoption. As more investors and institutions get involved, the stage is set for digital assets to become an integral part of the global financial landscape. Crypto's future is shaped by the push and pull of regulation and global adoption. The UK is considering tax breaks for DeFi users, while also tightening enforcement with new reporting rules. The EU is following suit, balancing innovation with stricter oversight. This dual approach creates a complex legal landscape for investors. Meanwhile, adoption is accelerating. Visa is expanding stablecoin payments across Europe, the Middle East, and Africa. In El Salvador, a new USDT Visa card will let users spend stablecoins directly from their wallets. These real-world applications move crypto beyond speculation and into everyday utility. Companies like Visa and Truther are building the infrastructure for mainstream acceptance. Regulation and adoption are converging to shape crypto's next chapter. As November 2025 ends, crypto stands at a pivotal moment. Resilient, but still fragile. The market's rebound is encouraging, but the next test is Bitcoin's battle with the $93,000 $96,000 resistance. Institutional inflows are a positive sign, but must persist to sustain the rally. The macro environment, especially Fed policy, will be decisive. In altcoins, XRP's ETF success and Solana's ETF ambitions highlight growing appetite for diversification. The market's strength is clear, but challenges remain. Key levels to watch: Bitcoin's resistance zone, institutional money flows, and Fed signals. Optimism is warranted, but caution is essential as the foundation for a new trend is still being laid.